Two of the smartest investors in AI just quietly made the same investment, and almost nobody's talking about it. Let me tell you first who they are. The first man is the one whose company builds the chips that powers almost every AI model on the planet. And the second one is a 24-year-old who put around $200 million into the companies that he believed will define the AI build-out, and has grown that portfolio by over 1,000% since by being extremely early to new themes. Now, these two are completely different people, but when I have gone through their recent investments and interviews, the same theme kept coming up. One, most people are not paying attention to yet. And there are three companies that showed up on both of their books specifically, and they have invested billions of dollars in them. So in this video, I will break down what those three stocks are, which one I'm personally investing into, and which one I would avoid, and also exactly how I would approach investing in them. By the way, my name is Zack Bakos. I'm a wealth management and financial planning professional. I've been investing for over 10 years. I grew my own investment portfolio into the millions, and I've also coached over 2,000 high net worth individuals. Now, why is this segment exploding? First of all, AI's hunger for computing power is growing faster than anyone can build for it. And a new data center that takes 3 to 5 years to permit, to build, and power is extremely slow in the current competitive market environment where companies want to be first to the market. So there's a gap between what the AI needs right now and what actually exists to power the AI. And that gap is what this whole opportunity is about. Companies, instead of building their own data centers, paying for companies that have already built it and simply renting for them. And again, the benefit here is that instead of taking 3 to 5 years, and by that point your competition has built your product many times over, you can pay for another company and rent the computing from them. Someone else will run it, someone else will own it, and they will give you the capacity when you need it, and of course when you're ready to pay for it. Now, this is a segment that's looking to grow from 23 billion to about $180 billion in revenue by 2030. And this is just the medium estimate. Some of the estimates are on the higher end are insane. So this is a segment that is looking to essentially go through a 5 to 10-fold increase over the coming 4 to 5 years. And this is called neoclouds. Again, the first step for a neocloud company is that they order thousands of NVIDIA GPUs, which is the engine of running the AI. Step 2, they will install them in data centers with land, with power and cooling. And step 3, AI companies, and not just AI companies, even companies like Microsoft and Meta, who are on the forefront of these trends, are paying for this actively billions of dollars in contracts upfront. So these AI companies and other companies who want to get access to AI computing are being locked in on very long-term contracts. So essentially, a neocloud company is a company that owns warehouses full of these AI computers and rents them out to other companies. Think of it like a landlord, except instead of apartments, it rents out AI supercomputers. And the three companies that are smart money are buying right now are doing exactly this. The three names that I have found that these investors have put billions of dollars into are CoreWeave, Nebius, and Iris Energy or IREN Limited. Now, I have done detailed analysis on all three of these companies, their revenue, their balance sheet, their technical analysis, and we're going to look into each of these companies now one by one. In terms of what they do in general, it's kind of the same. They all rent out AI computing power. So in the first look, you'll be like, okay, these are all doing the same thing, but actually they're all doing it in completely different ways to make the same bet. So it comes down kind of to one question when it comes to analyzing the fundamentals of these businesses is one, how much of these companies own outright and how much are they borrowing to fund all of this expensive data center build out? Because if you compare the three companies, IREN is one of those that owns the most of the land and the software and the tooling and has the least amount of that. And CoreWeave is the one that is actually the biggest from all of these, but also has the most debt. And then there's Nebius in the middle, who's already a profitable business, so kind of like already the best run business fundamentally between all of these, but is not growing as fast, for example, in terms of how much revenue is already being generated as CoreWeave. So there's a lot of nuances here of like how you would approach this as an investor and what you would want to be betting on. And that's what I'm going to go into next. So if we go into CRWV, which is again CoreWeave, this one is the scale leader. They are the biggest GPU rental company. It rents NVIDIA chips to the top AI labs. Microsoft, OpenAI, Meta, Anthropic have all long-term contracts locked in with this company. 9 of the 10 leading AI players outside of China are customers of this. And they have already generated about $13 billion in revenue in 2026, which is a growth of about 112%. They also have $40 billion worth of contracts logged in 1 quarter, and its revenue is already 75% logged in for 2027, and the customers are prepaying for these contracts. The difference between CoreWeave and other companies is that as soon as they are getting the payments from these companies, they're just going back and building more data centers with all of those funds. So the risk here is that this is the company that is, if the build out plays out well and they can rent this out truly, then this company is going to make a lot of money, a lot more than probably the other ones. It's already making more. But the risk is that in terms of fundamentals, they're using loads of debt to be able to finance this build out. And from that perspective, it is one of the riskier bet because of that balance sheet of the high levels of debt. When we look at the chart of CoreWeave and how I would approach it, to me personally, this is a very interesting stock to bet on at the right valuation, at the right price. And I personally wouldn't be rushing to get into it at the current valuation. I do think that NVIDIA invested about $115, and I also think Leopold invested around this $100 level. So if you were to decide, hey, I want to make an investment into the stock right now, you would be kind of getting the same entry point as 2 of those billionaires who thought, I think this is a good price to be investing into the stock, right? I personally think that there's an opportunity here, and if I see the opportunity, I will take it, but only at an extremely good valuation. And to me, the extremely good valuation would happen at the lows of around $70. This is the price range that has served as a support in this range previously. I would think $80 to $70 would make this an extremely attractive bet for the long term in the AI build-out. We all see the data of how much a segment is expected to grow. This is currently one of the biggest leaders. Again, I wouldn't be looking at it as like a short-term trade, more of a long-term investment. And if I'm to see that, if I'm to see $80 to the $60 range in terms of entry point, they will be very interesting to me, especially because just going back to the previous highs in this range, around $140, is already 100% upside from the right entry point. So I'm very interested in CoreWeave at the right entry price. I'm willing to miss it. I'm willing to wait for a different trade. Let's say the market just absolutely keeps going up, it breaks out and it keeps going higher. Then it's a different structure, because at that point, this is a breakout, right? We are on a breakout of CoreWeave, and there's a lot of momentum. Right now, it's more of a consolidation. It has tried to break out a few times and has failed. And if the markets go lower in the coming couple of months, again, I'm more patiently waiting for opportunity to come to me. If it comes, I will pull the trigger. If not, no worries. There's other opportunities in the market. There's an abundance of it, actually. So the second stock is NBIS, or Nebius. And I called it the quality play because this is the only stock between the 3 of them. There's actually a profitable company right now. What they do is that they build the full stack, the hardware and the software, and they also fund its growth with cash and equity instead of borrowing and piling on more debt. So in terms of a business fundamentals, balance sheet, this is probably the cleanest business to own out of all the three of them. In terms of market cap, it's quite similar to where CoreWeave is at. Obviously, it's a pretty volatile stock, so it's around 60 billion currently. In terms of revenue, about 3.4 billion, and it has seen a 600% revenue growth year over year. Now, the interesting part here is that they have signed a deal with Meta alone that is worth $27 billion. That is an unbelievably huge amount of deal for a company that is valued at $60 billion. But if you look at how the price action has gone on Nebius, you can clearly see that the market has started to price this growth in. And on the announcement of all of these news that have happened, we can clearly see that, again, this is a stock that is very extended from where it was trading even just a couple of months ago. So when I see stocks like that with this kind of high momentum and bullish upside and breakout, and again, maybe CoreWeave, we look at it, is in this range. Maybe it is just in this consolidation where it's just going sideways, and nothing is happening here. But once the breakout has happened, it's going to have this move. Again, it's a very big possibility that that is the case. For Nebius, this breakout has already happened, and the average price of the stock over the last 200 days is $130. So again, would I personally be chasing this stock after it has had a massive breakout and is so far extended from the average price of the last 200 days? I'm personally not. I'm a very patient investor. I do detailed research on what I want to get into, what the growth potential is long term, and I'm going to patiently wait for my entry point on the stock. If I was to see this stock come down somewhere in the 150s, 140 range, that would be an approximate of a 30-40%, actually 50%, up to 50% correction from the all-time highs on the stock. Is this something that is never happened before? Absolutely not. This is something that has happened even just earlier this year. The stock has gone down 50%. A year before, we have seen the stock drop in 2025, 64%. So just because there's hype right now, it doesn't mean that something cannot happen in the market that actually pushes the prices of these stocks lower. And that's kind of just what I'm betting on. I think I found a theme that I'm still relatively early to, just like with robotics, like these robots are not running around everywhere. So you're very early to these themes, but have to be mindful of what is currently priced in and what is a good entry point into these investments. And those two are different things for me. Personally, when it comes to this stock, I like it the most out of the three. This is the one that I would most like to own in my own investment portfolio, the one I would most like to trade. But the caveat here is exactly that I would want to own this at the right price. So what is going to happen to this stock, whether it just comes down to here and keeps making all-time highs, it's a possibility. Or if it gets rejected, then the next level to be looking at is going to be somewhere along the lines of the 200 SMA. Now, whether that's 160, 150, when we get there in the coming months, we will see. But that's how I would personally approach making a good entry, a good valuation into a very quickly growing stock. And the third one is Iris Energy, or IREN. This is the one that owns most land and power of the three on renewable energy. The challenge I've seen with this is that this is a company that is initially a Bitcoin mining company. That is the core business that they have, and maybe right now 15-20% of their business is focusing into, like, pivoting into AI cloud, but most of the revenue is still coming from mining today, which means if I want to make a pure bet on a neocloud investment, IREN is just not the one to go with, in my opinion. And the risk is that this is still quite heavily related to Bitcoin as a business. And currently, Bitcoin is not looking very good. I think when we see where BTC is trading at right now, it is trading in its usual 1-year bear cycle, and it's likely going to drop maybe another 25 to 30% to the 40-50K range before this bottoms. So I don't really want to take that. So that's not really a risk that I personally want to take on, because I really want to invest in a pure, fast-growing, money-making potential neocloud business in my portfolio. And IREN is unfortunately not that because of the BTC exposure. In terms of a chart, it is sitting on a 200-day SMA. It has tried to break above the range of about $70, which is the previous all-time highs. In terms of technicals, again, it's not a bad looking business. It is also just consolidating in this $48 to $70 range. Where this goes is, again, less interesting to me personally. If I was to make bets right now, I would choose CoreWeave over IREN for my own portfolio, because again, I think the risks associated with BTC, maybe it's something that we already seen just today. Today's a down day in the market. IREN is down 4%, NBIS is down 0.5%. I think CoreWeave was down also less than 1%. So again, the risks that are going to come from BTC, because we are in the bottoming cycle of Bitcoin, which is the most bearish part for the next 4 months, I wouldn't touch it right now. If you're a person though who's thinking, hey, maybe I want to get exposure both to Bitcoin and this neocloud thing with one investment, and you're willing to wait for BTC at the bottom in Q4, then, and you see CoreWave's, IREN somewhere in the $30 range, this might be an interesting bet to consider to take for the portfolio. But again, for what I'm personally looking at, this is not the one that I am the most interested in. So again, these are the 3 companies. If you look at them comparison, kind of like side by side, who makes the most money? CoreWeave. Who is the most profitable today? Nebius. Why? Because CoreWeave has tons of debt, is sitting on deep losses overall. They don't care about this because they're just trying to grow as fast as possible and capture as big of the market share as possible. But because of that debt, $30 billion in the balance sheet, that is risk associated with that. Nebius is the cleanest from that perspective. And IREN also has a solid balance sheet. They have that. They could add more if they wanted to. In terms of fundamentals, IREN owns their power fully. Nebius is building it, and CoreWeave is purely leasing it. Nebius also has a huge concentration of customers, just 2 of them. Because we're so early in this team, I don't think that's like such a big thing. Again, if I was to invest in this company, I'm doing it for a longer term. Again, this is a segment that is expected to grow almost 10x in the next 5 to 6 years, right? So this is a huge, huge element of my investment thesis, that I do expect all of these companies to be able to fight for a bigger piece of the pie, but also the pie is going to be growing continuously. So again, if I had to rank these 3, I would think Nebius has the best fundamentals. Right now, it's not at a price where I would invest into. CoreWeave probably has the highest risk-reward bet from all of them in terms of backlog, and if they really pull it off, it's probably going to be the fastest growing one from all of them. I would be keen to make a bet on this stock as well at the right entry price, which I showed is on the support level. And IREN is a speculative one because of the association of Bitcoin. I personally would just avoid it. I do have individual Bitcoin investment in my portfolio for the long term that I have. So that's another factor for me personally, that I don't really want to get into another stock that has more IB or BTC related exposure, because I want to invest in neoclouds. That's kind of the point of this research, is just to get to the point of this. Thank you for watching. If you're interested in seeing more of this kind of videos and research, then make sure you click in the description below, where I share a link to subscribe to my free newsletter. Have a beautiful day.